Yes, Raphael Bostic, the Atlanta Fed President, joins us now on a fortuitous day. Raphael, thank you for joining us.
It's good to be here, Steve. Good to see you.
So I would almost never start an interview with a Fed official like this, but because yesterday was so confusing, I need to ask you to help us put what the chairman said into context. If you look at the 10-year, the yield was up, it was down, it was sideways, and ultimately it settled lower. The 2-year yield went up, went down, went sideways, ultimately settled a little bit lower. The stock market was up and down. Was it a hawkish message? Was it a dovish message? How did you put it in? I know you listen to the chairman almost probably more closely than I do.
I listen to him every day, and it's actually very important. Look, these are complicated times because there are lots of things going in all directions. We have inflation's come down a lot, and I think the momentum is going to continue to be that way. But you see the resilience in the broader economy, which makes it difficult, and that it's a complicated thing. And so in talking about the economy, it's always a challenge because you have these cross currents. Whatever narrative you want to tell, there is some data that's a counter on it. For me, I just try to stay focused on looking ahead, trying to get intelligence about where people are thinking and feeling the economy is going to go. And what I've learned in the 6 years I've been in this job is that when you talk to real people and they tell you real things, it's real. And so I really try to lean into that and take that on board.
And what are they telling you now, and how different is that from the strong data that we've had recently? Strong retail sales, up. Your Atlanta Fed GDP is, practically a skyscraper out there.
It's north of 5, which is high. I understand that. But look, when I talk to businesses, they all tell me the slowdown is coming. They see it. They are seeing their customers start to act in different ways. And they expect that where we are today is a lot stronger than we will be 6 months from now. I've really taken that on board and thinking about what restrictiveness looks like and how it's likely to play out over the next 6 months.
Before I open it up to my esteemed colleagues, I just need to ask you this question. You are the only Fed official, from what I can see, who has used the phrase sufficiently restrictive. Chair Powell yesterday twice got up to there and said, no. He twice said we're still looking for that level. Are you going to be sat at the table all the way at the other end when you get into the next meeting, or are you feeling alone out on a limb? Do you still feel like the Fed is sufficiently restrictive here?
So you'll have to ask everyone else sort of where they are. My seat is set at the table where it is.
Oh, it doesn't change based on your views.
They don't move us around depending on whether they're happy with our view or not. But what I would say is this. I've listened to a number of my other colleagues, and what they have said is very similar to what I'm hearing, which is the businesses are feeling and they're seeing the slowdown. They're anticipating things will contract and constrict from here. And they say a bunch of our policy tightness still hasn't gone through the whole economy. And so I think the trajectory of the economy is likely to go in a way that is very consistent with what my outlook is, which is we are not going to see a recession. That's not in my outlook. We're going to see a slowdown, and inflation will get down to its 2%.
President Bostic, I hear what Chairman Powell said yesterday, and I kind of think, okay, it sounds like he's not really eager to raise rates. It sounds like this has probably bought some time for the committee to decide what they want to do next. Is that the sense you get? Like, he doesn't want to let markets know that maybe they're done, because that would do some pretty lousy things anyway if the market takes that and runs to the bank with it. But at this point, look, we're going to look around. We're data dependent. To me, that says we're just going to see what happens.
Well, I think we're always that way. I mean, so we always want to see what happens. I think the risk is that the market gets ahead of itself and starts to anticipate that we have had an outcome before we've actually had the outcome. And so as I talk about it, I really do try to keep people focused on, look, inflation is still at 3.7%. Our target is 2%. They are not the same, and we have to get a lot closer to the 2% before we're going to consider, before I would consider any kind of relaxation of our posture. Inflation is job one. We have to get that under control. And there's a risk that if we start to hint, oh, we think we're already there.
We think rates are coming down.
Exactly. And I don't, that's not in my head today. And I don't think that we'll be cutting rates before the middle of next year at the earliest.